Ladies and gentlemen, we have massive news for Tesla stock that could send Tesla back into the 330 to 350 range, but we also have the robotaxi launch upcoming, and I will discuss what that could do for Tesla stock. Mix these two things together, Tesla could very soon be in the 400s. Yeah, I know. Sounds crazy. I get it, but yeah, you gotta be prepared for this because I think a big rally could be starting following this news. Ladies and gentlemen, welcome back to the channel. Yesterday was a great day for markets, and we have some big news today that I want to share with you that I think over this weekend we're gonna get more of it, and by Monday I think we could have a pretty good day. Now, I'll speculate here in this video what I mean by that and what I think is going to happen next week. But there's one thing that really matters to markets right now, and that is a China trade deal. Okay, the economy is important, but we just got the jobs report that actually came in a little bit better than expected. Things are weakening, but the faster we get a China trade deals globally, lower uncertainty, the better off markets will be. And we're getting some positive news on that front today. China's foreign ministry will hold talks with the U.S. China's foreign ministry says the first meeting of the China-U.S. Economic and Trade Consultation Mechanism will be held with the U.S. during this visit. China's Commerce Ministry says we have approved a certain number of compliant rare earth applications. Here's the good news. And will continue to strengthen the examination and approvals. This is good. China's Commerce Ministry says that China is ready to further enhance communication and dialogue with relevant countries on export controls. That's basically saying the US. They're ready to lower export controls. But you know what nobody's talking about? It's the export controls against China. There's one big one, and it's semiconductors. The U.S. will have to loosen their restrictions on NVIDIA. That is going to be seen as very much a positive for markets and for AI stocks. And I think that's why AI stocks did so well yesterday. I think someone is kind of sniffing that out. I think the algorithms are kind of positioning for another rally in AI stock. China says they are still reviewing other rare earth export applications. China says they observe rare earth demand in autos and other industries. And what was also big news in the last 48 hours, Elon Musk and the Trump situation definitely put a fair bit of pressure on markets and Tesla stock specifically. JD Vance did a podcast with Theo Von and said that Musk relaxing would resolve issues. And Vance says that he is hoping that Musk will return to the group. And he says that he sees Musk making a mistake in going after Trump. Now, in economic data for this upcoming week, you will get on Monday wholesale inventories month over month, which feeds into the GDP report. Consumer inflation expectations, which have remained very steady for the most part at about 3.6% for the last 2 months, even though some other metrics like the Michigan Consumer Sentiment Survey shows inflation expectations that have just completely blown out. That has a very political, component to it. On Tuesday, you get the NFIB Business Optimism Index, a couple bond auctions, like a 3-year bond auction, 52-week bond auction. On Wednesday, you get core CPI. Core month over month is expected at 0.3%. Last month was 0.2%. Most Fed officials believe last month's inflation report was the last inflation report that we didn't see tariff impacts. I don't think we're going to see inflation come at all. So Wednesday is going to be a big catalyst if we actually don't see that inflation. If CPI comes in lower than expected. Okay, year over year is expected at 2.9%. Last month was 2.8%. So you are expecting a little bit of an uptick, But I don't think that's going to happen. And that's part of my bull thesis, why I think markets are going to rally almost 20% from here into year end. We're not going to see inflation. The economy is going to hold up. We're going to start seeing deregulation and a focus on AI. And then we're going to look at 2026 as markets generally price in the next 12 months. So we're kind of already pricing into the first half of 2026. And people are going to say, wow, that could be a very constructive environment when we have our trade deals done, when we have inflation that is basically gone and the Fed is cutting rates. It's going to be a focus on growth and AI at that point. As long as we're not in a recession, markets should go higher into year end. Now, headline inflation, CPI, is expected at 0.2%, unchanged from last month, and year over year is expected at 2.5%. Moving up from 2.3% last month. So I'm actually quite optimistic for Wednesday's CPI report, especially core, because those expectations are a little bit higher. Now, on Wednesday as well, you get a 10-year bond auction at about 1 p.m. These have been important considering the government funding bill, the tax big beautiful bill. Some of these bond auctions have gotten blown out recently where there hasn't been a lot of demand, so yields have skyrocketed. We really want to see if that continues or if we start to get more demand in the bond auctions. On Thursday, you get PPI month over month expecting positive 0.2%, core PPI expecting positive 0.3%, but last month's numbers were so negative. I mean, still on a 2-month basis, even if we meet expectations, you're going to be negative. Okay, so I don't think PPI matters all too much. Initial jobless claims are expected at 239,000, down from last week's 247,000. That's getting up there to like a little bit of a worry zone, right? Anything above like 230, 235, 240, people start to worry for initial jobless claims. Like if you start to get closer to like 300, people are really going to start paying attention to that again. So I think that's something you need to watch in this upcoming week. And then on Friday, you will get the Michigan Consumer Sentiment Survey. Wall Street really cares about the inflation expectations, but again, they're very political, and these numbers are at like 50, 40, 50-year highs. They don't make any sense in the grand scope of things. For 1 year and 5-year inflation expectations, 1 year inflation expectations are around 6.6%. I mean, they've exploded recently and we haven't seen any inflation. 5-year inflation expectations at 4.2%. Like these are dramatically higher than where you were even in 2022, right? When you had a lot of inflation. The 1-year inflation expectation was only at 5.4% in April of 2022 when inflation was, skyrocketing. Now you're at 6.6%. Again, doesn't make a whole lot of sense. And as far as earnings for this upcoming week, still, you have some names. Casey's in after hours on Monday, Lakeland Industries and Skillsoft. Tuesday, pre-market, JM Smucker, a couple other names. Tuesday and after hours, GameStop, GitHub, or GitLab, Dave & Buster's, Stitch Fix, and Pet Meds. Wednesday pre-market, Chewy, Victoria's Secret. Wednesday and after hours, Oracle. That's going to be a bigger one for this week. Thursday and after hours, you have Adobe and Restoration Hardware. So a couple names that can, be important. Now take a listen to this clip from CNBC that says the economy is largely okay. This is from strategist Chris Verone.
Partner and chief market strategist Chris Verone. He's back with us at Post Nights. Good to see you.
Great to be here. Thanks for having me.
So let's just take the trade news. Yeah. We're going to have this meeting in London between the two parties and the bill. I mean, how are you thinking about both?
Well, what we've been telling clients for weeks and weeks is one must actually be headline agnostic here. I think that works on both sides because the headlines a week or 2 weeks ago weren't particularly compelling, and they certainly seem more optimistic today. I don't want that to distract us from what the message of the market is. And I think the message of the market is still one that is largely pretty constructive here. New 3-month high for the S&P today. That comes on top of the NASDAQ last week making a new 3-month high. Those are generally pretty bullish conditions. Maybe most importantly, cyclicals continue to hum along. I know the data on balance has been softer. The market's saying ignore it. Cyclicals making new highs versus defensives says, hey, the economy's largely okay here.
How can you possibly be headline agnostic? How can you tell us that we need to be? when the future of the trade war and the future of the tax bill matter more than anything else, arguably?
Because I think every single market message that we've seen since basically the lows back in April is telling us, think what could go right, not wrong, over the next 6 months. I'll give you some examples. It was a month ago we were on your show. You got the big expansion in 1 month highs. 60% of the S&P made a 1 month high. You look at that data historically, it says forget whatever you were thinking and think about what could go right over the next 6 months. So let's put a check there. We've recovered 80% or 85% of the entire decline. There's really never been an instance historically where you see big weakness after recovering that degree of the decline. And I think the leadership message, financials continue to hold their own, industrials continue to hold their own. That doesn't sound like a market that's terribly concerned about the economic consequences of what's going on with trade.
Doesn't matter, though, the method to why we got that bounce back. It was all because of the rollback of the tariffs on China. We're not having this conversation today if that doesn't happen, are we?
Yeah, I think it's a fair point in the context of this was trade-induced on the way down, and it certainly seems like it was trade-induced on the way back up. But what hasn't really changed this whole time, pre-April 2nd and post-April 2nd, is the momentum stocks continue to lead. So in a lot of respects, Scott, the world looks very familiar to what we knew before April 2nd, post-April 2nd.
Did we like the way things looked then before April 2nd, and the fact that if tech was going to be leading, you'd still have the naysayers saying, well, I mean, this can't go on forever. Their growth rates are, in fact, slowing. Maybe their multiples aren't justified at current levels as a result of that. Yet here we are with the NASDAQ up 10.6% in a month.
And I think what's most notable about that move in tech discretely, or NASDAQ more broadly, look how the composition of tech is starting to evolve here. For the last year, it was own software, sell semis. That is starting to change here. All of these analog semis, many of which were down 40, 50% over the last year, all getting better. KLAC, Lam Research, Micron. The Kospi broke out decisively over the last week or so. It's a message on global growth. It's a message on S&P earnings. It's a message on semis. So I think, if anything, tech has basically shown itself to reaffirm itself as the leader in this market. I think very constructive signs coming from tech.
I mean, it's semis have bounced back. It's semis have been working so well. Software's been working so well. It's kind of everything within that universe has been working so well, including so-called old tech. Like the IBMs of the world.
IBM, Cisco, Oracle. There was one point 2 or 3 weeks ago, you had more tech stocks make a 1 month high than at any point in the last 20 years.
Wow.
That is bullish, not bearish. So I know it's tempting to look at this week's headline or last week's headline and get very wrapped up. I think the market is telling you, look through it. The conditions we're seeing, whether it's credit, whether it's leadership, whether it's cyclicals, generally occur in bull markets, not bear markets.
And basically what he said is, historically, the next 6 months should be really good, or at least good. I think they're going to be really good. I think, again, this whole crash, trade-induced, blah, 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 fine. I get it. I think we're going to get deals done. I don't think it's going to be nearly as bad as people think. I don't think the economy is going to weaken into a recession, because ultimately people don't change their spending patterns, right? People don't. They just spend, in America at least. And as long as they have a job there, they will continue to spend. And so far, so good on that front. We just got the jobs report last week, which even in the short term can continue to be a positive factor for markets. Hence, S&P up over 1% yesterday, up another 0.1% in after hours on Friday. I think there's a lot of people that are underpositioned this market, especially hedge funds and institutions. And it's interesting, what tends to happen is people don't actually allocate to stocks in this range, right? Once you get the big rally, once you're, sitting near all-time highs. What's funny about this, when hedge funds and institutions are actually going to start buying a lot of stocks again, like adding to long exposure, is when we break all-time highs. Yeah, I know. Because this is the moment where you're either going to break new all-time highs or you're going to fall again, right? Once you break new all-time highs, markets tend to hit more new all-time highs, right? So yeah, if we can get above 611.39 this week, we're going to be in a really really good place for my projected 20% year-end rally. Now, that puts the markets somewhere in the neighborhood of 700 on the SPY, at least when I said it. To get to 700 on the SPY today would be about a 17% rally. So we're up about 3% from when I was first calling for a 20% rally. It was actually a little bit over 20%, but we'll just call it 20%. Now it's only a 16.84% rally to 700. That's where I think we're going into year end. And I think AI stocks, I think high growth stocks, high beta stocks, as that clip just referenced, are going to be the ones that continue to lead this market higher, because that's where the growth is. AI is where the future is. And I think Wall Street is going to, when they do start positioning into markets, position into those areas. Like if you think AI stocks are in a bubble, you don't know what a bubble is. Okay. These valuations are nowhere even close to. And we could start to look something like a bubble. Whether it's a bubble or not, takes some time. But I think you could get very optimistic here in markets over the next 6 months. So let me know your thoughts on this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day. Now we'll see you in the next one.